How's it going, everyone? It's Sam. It might be getting cold outside, but the IPO market is hotter than ever, and Snowflake is no exception. So, Snowflake is a new IPO that's coming out on Tuesday, so be on the lookout for it. It's under ticker SNOW, SNOW, and they have a lot of hype around it. I'm going to go over why this stock is important, why we should take a look at it. I'm going to go over their huge growth. I'm going to go over their big name investors that are investing for the first time in IPOs. And I'm going to go over why it's important for the future, and then also some of the big news that they had just today, just on Monday, and why we should pay attention to it. So if you guys like this, please leave a thumbs up. I appreciate it. Also, if you want $50 for free from SoFi Money, as long as you deposit $500 or more, so even if you just set up a direct deposit or something from your job, you can get $50 for free. You can put that in whatever stock you want. You can put it in Snowflake, you can put it in Workhorse, you can put it in Tesla, wherever you want. And that can be some passive income for you. So I appreciate it. There's a link down there. Let's get into the video. So Snowflake is a cloud data platform. We're going to go over what that means exactly. Honestly, I am not into tech, so I understand a little bit of what they do, but if you know a little bit better, let me know. But take a look at what Warren Buffett said 1 year ago. So just in 2019, he said this.
Coming to market, but I would say that in 54 years, well, I don't think Berkshire's ever bought a new issue. I mean, the idea of saying the best place in the world I could put my money is something where all the selling incentives are there, commissions are higher.
So he basically says there that they have never bought an IPO. They don't think that it's worth it because of all the extra payments that have to go out. So many people getting incentives to buy and sell. They think that, it could be a value. It could be better than what they do. The stock could go up higher than what they invest in. But to think that those are the stocks that are the best value, they are value investors, right? So they are not going for whatever stock is going to appreciate the quickest just based on hype. They are really looking at who brings in the most money for the least price possible. So they actually came out over the last couple of weeks and invested $250 million into this IPO. This is huge news, right? So why was this company able to bring out $250 million from one of the best investors throughout time? So don't give me hate in the comments for it if you don't like Warren Buffett, but he is, undisputedly one of the best investors over the last 80 years. And why is it that important to him that he invests in it? Also, the CEO of Salesforce was also putting $250 million. So they have a couple big names behind them. And let's take a look at what they do. So they are a cloud-based data warehouse. What does this mean? Cloud-based data warehouses typically include a database or pointers to a collection of databases where the production data is collected. The second core element of many modern cloud data warehouses is that there's some form of integrated query engine that enables users to research and analyze the data. Honestly, like I said, I don't do this for a living. This is not my sector, but essentially I think of it as there are a lot of large companies. They have these needs to analyze their data in ways that we as individuals can't understand. I mean, I use Excel. I actually use Google Sheets now to track my expenses. Over the last 2 or 3 years, I've had about 1,400 expenses on there. And I still get it where I have to wait a few seconds for me to pull up, and it takes a few seconds for things to load. It's a little bit slower than it used to be. But imagine if you not only had thousands, not tens of thousands, not hundreds of thousands, but maybe you have millions, billions, trillions of pieces of data, and you have to sort through them. You have to do different difficult calculations in them and really try to make sense of the data. Well, on a large company, there are these billions of information pieces that they are trying to all put together to help them. So if they have to pay some company like Snowflake $1 million to help them kind of make a light switch click for them to be able to realize something that they didn't realize before, if they're able to integrate something into their system that makes it 1/10 of 1% better, and they are a company that makes $100 billion, well, that 1/10 of 1% actually just made them $100 million. So they invested $1 million into Snowflake. They were able to make $100 million. So I realize that's kind of an extreme example, But that is kind of where I think of it. So there are a lot of companies that are willing to pay large amounts to just increase their net income or increase their profits just a little bit to be able to switch up how they market. And this is something that Snowflake can do. Now, the thing that I don't really understand is how this is a lot better than other platforms, because there are some other big name competitors in the space. But let's take a look at their S1, which is something that they came out with a few months ago, and kind of take a look at their profits, at their losses, and get a feel for how fast this company is growing. So you can look through this. It's on SEC's website. They have 121% revenue growth year over year. They have what's called net retention, 158%. So what they're doing is they get these clients in, and they are able to actually increase the cost over time. So they're selling them more different products that increases their cost. So they are able to increase each of their customers' costs and therefore their profit year over year. They have over 3,000 customers, 56 of which are $1 million plus customers. So those are the big boys. And then you can see here too, they've just had great quarter over quarter growth. So this is quarters, each quarter, not years. These are quarters. You can see here they've had massive growth over the last year. So if you go down a little bit further, you can actually see the meat of it a little bit more. You can look at 2019 fiscal year versus 2020. You can take a look at their revenue, which has increased by about 150%. So it's about 2.5x what it was last year. You can see their gross profit. You can see their cost of revenue. So while their revenue went up about 2.5 times, their cost of revenue did not go up 2.5 times, which is good. They are having a massive loss. You can see that here. They were at a loss of about $358 million. So obviously, Warren Buffett does not like companies that lose money, but he is still investing in this. Now, I don't think that he personally is investing or he's not making the decisions for the company. I think it's one of the people that work underneath him that see massive growth in this company, but it's still interesting to take a look at. You can see their net loss was about $348 million. Now, you can also see their 6 months ending July 31. So their revenue for this last 6 months, and they look at the years kind of funky here. So this 2020 is not actually from January 1 to January 31, but their last 6 months, as you can see here, they had revenue of $241 million, and that's just in half the year. So that is a really good sign that they are increasing so much year over year. And you can kind of take a look at their marketing information, their research and development, how much they're spending on all this. They are spending a lot of money on research and development, and then especially a lot of money on marketing. You can see here, they spent more money in marketing than they made last year. I understand this. This, I think, is more important for a company like this that sells software. So with a normal company, let's say Coca-Cola has their Coca-Cola can, they put $1 million into ads or into sales and marketing, and they get $2 million. Well, that's not reoccurring, right? So that is something that people just bought. So they were able to turn $1 into $2. However, if you are a company that sells this reoccurring revenue or reoccurring product, so you spend $1 million and it brings in $2 million, but then it brings in $2 million the next year, and the next year, and the next year, and the next year, you've 10x your money. So that's kind of how you have to think about it here, especially if they have the best technology. The companies are going to stick around. So that doesn't really bother me that they're spending so much there. And if they are not spending this much money, they're almost profitable. So if they almost are profitable, they are only down about 60 million, which I realize is a lot still, but they're a lot closer to where they need to be if you take out that marketing budget. Now, they do have some big brand name competitors. Google and Amazon both have their alternatives. So I've heard that Snowflake is the best. Again, I don't know personally because I've never used Snowflake, but they do have a lot of clients that apparently like them. They are able to kind of capitalize on the clients that they have already and continue to grow, obviously, from their revenue increases. Now, the news that came out today was that they were expected to sell for about $70 to $75 on their IPO day. However, they increased this to between 100 and 110. Now, this isn't uncommon. Usually there's so much hype around the stock that sometimes they bump it up, and that's what they did. Now, this gives them a valuation of about $30 billion. And as we can see here, their sales are not there for that, right? So they are selling at a very expensive amount right now. So if we just look 240 million over 6 months, double that, that's about 500 million. They're selling at a valuation of 30 billion. That's a price to sales ratio of about 60. That is very expensive. Some companies sell for a steep discount, so they sell for a lot less than what their sales are for the year. But with these growth companies, you can see this. A lot of the time, they will sell for a lot more than whatever their sales are because they're expecting them to continue to double, triple, whatever they do year after year. Now, most companies kind of cap out eventually, so they can't continuously grow exponentially. Some of them have to level off at some point because there's just not enough money. There's not enough clients. It's impossible really to grow to a scale that just continuously goes at an exponential rate. Am I buying this stock? No. So right now, I'm not planning on buying the stock. This is something where I get really excited seeing these numbers. I get really excited reading about it, but I don't fully understand the company. Now, I could buy the stock in 2 days, let's say. I've watched a lot of videos, I've done a lot of research, but I still don't feel comfortable right now, like today, buying this company. I don't really understand the company and the business enough. I don't understand the sector enough, but that could definitely change in the near future. I think this probably will be a really good growth company. As you can see here, they've been growing a lot. They have to continue to increase their marketing budget. They have to possibly dilute some shares. So they are talking about diluting shares here in the near future if the stock goes above a certain price. So you could definitely see some nice appreciation, especially in the short term. Like it might go up from 100 to 200 within a month. Who knows? I see it more going from maybe 100 to 130 or 150 in the first week or so. But I don't want to speculate that much on a company that I don't really fully understand. It's kind of like Warren Buffett says, there are other places to put your money. And I have seen some really good appreciation in Workhorse, in Foot Locker, in Facebook, in Tesla. All these companies are companies that I invested in, and they've done really well. So let me know your thoughts below. Are you buying Snowflake? Let me know. Are you just going to keep an eye on it? What are you doing? I appreciate it. Check out those links to SoFi Money down there. And also, if you want a free stock with WeBull worth up to $1,600, you can check that out too. We have a Patreon down there too if you want to join our Discord server and talk to different people about investing and about IPOs and all that. So check all that out. There's a lot of good stuff, a lot of stuff to save you money and make you money in the description. And I will see you guys in the next video. Bye.